Welcome. We are back. Another all-right day for the market. Well, I've not been having a lot of all-right days. Been a lot of dumping lately, but today was a little bit mixed. We were red for a good amount of the day, turned green on some of the indices towards the end of the day. Got FOMC tomorrow. I'm going to unpack all of that. Not a lot going on. Might be a little bit of a quicker stream tonight. I'm just going to kind of get to the main points and keep it short and sweet, I guess, unless we have a lot of take requests. Yeah. We're going to start off with crypto. I'm going to talk about some other markets. We're going to talk about the overall stock market. I do think we could be seeing a dead cat bounce pretty soon. I'm going to say why. Let's get there first, all right? So starting off with Bitcoin, you're watching last night's stream, you were talking about around 20K, 19.9K as the next level of support for Bitcoin. Got pretty close actually last night, falling all the way down to about 20.8K. So very interesting. I mean, this general area, 19K, 20K, 21K, this area where you had a major cycle top is potentially where you could see some support now. Okay, there's a lot of volume coming in here. You're oversold. I'm not saying this is the bottom for good, but I'm just saying this is an area where I think a lot of people are looking to buy. I do think that, and I think we've already seen an okay amount of that with this little bounce up about 10% off the lows. But I just think, a lot of people have had that 20K price point in their mind for so long, and you could see people buying off that level. And if that level breaks, then we'll get there, or we'll talk about it when we get there. But this is an area where I do think buyers might step in. So I'm just keeping an eye on these general areas, and we'll see what happens in the next couple of weeks. You still need more time for a pattern to develop and for the oscillators to develop. Even classic bullish divergence is eventually possible, but there's not even really a point in talking about it right now for Bitcoin. So 22K for now. We'll see what this turns into in the next few days. Moving on to Ethereum. Take a look at this. It's okay. It's holding the PCZ of this massive bullish gartly that started during the COVID crash. So, let's say Bitcoin holds that 20K, Ethereum holds this gartly PCZ. Those could be some decent signs for at least a reflex rally, at least a dead cat bounce. But yeah, these are definitely areas where I do think you could see maybe some short-term, I wouldn't even say bullishness, but just some little bit of a break from all the crazy selling. That's all I'm thinking. I think the selling might start to slow down a little bit, and if I'm wrong, I'm wrong. But that's where you're currently at with crypto. Moving on to other markets, let's talk about the 10-year. Continuing higher, all the way at 3.5% pretty much. This is absolutely insane. We talked about the weekly breakout last night on stream. Your highest level since 2011 in over a decade. So major breakout. This is one of the only asset classes, I know there's some commodities, but one of the only asset classes that's going up right now, which is crazy. So 10-year continuing higher. It is getting overbought now. I don't really see any bearish signals apart from the RSI, but look out for potential bearish candles to form at some point. I'm sure they will. It's just a matter of when. And then moving on, let's talk about crude oil futures. This is something you want to keep a close eye on. I know you're all talking about oil and whatnot. You might be seeing a breakdown here for crude oil futures. And your MACD just flipped to red. We've been looking at this wedge for a little bit, and it looks like it's testing a breakdown. You've actually got triple classic bearish divergence on the 4-hour too. It's a very interesting formation. If this breaks, your next support's around 115. It's only a few points lower, but then if you break that all the way down to 93. So you're testing a breakdown for crude oil futures right now. Moving on to metals. Gold continuing lower after all the bearishness yesterday. It's just, I don't think this is looking good. Bear flag, bearish divergence, bearish engulfing candle yesterday, broke under the 200-day moving average. It's just, you know, look at the levels, but right now the bulls have definitely lost control very quickly. Same goes for silver. Kind of back tested the bottom of this little support zone from these lows over here. A couple of these lows as resistance. Look, it was once support right over here, flipped perfectly into resistance. Today it's like a downside break hook and go potentially. So if you're long silver or something, you really hope that these $20 lows hold, because if not, it could be a bit of a longer way down. I'd say like 1892 might be the next level from these lows in 2013, 2014, a couple of these highs in 2019. That's where you're currently at. And then finally, the dollar currency index continuing higher, very similar to the US 10-year, the hidden bullish divergence and the bull flag playing out. I don't think there's much of any resistance here up until about 106 from a high in 89. Wow. So very historical levels being created. I don't know the best way to put it. Like, you've not been in these prices in a long time. And looks like the Hang Seng Index had a little bit of a flat day, gapped down and then closed flat. So those are some other markets. Let's move over to the stock market. So tomorrow we have the FOMC meeting and Powell speaking at 2:30. So the statement at 2 p.m. Powell speaking with the Powell's press conference or whatever at 2:30. So this is something that's probably going to lead to some intraday volatility in the afternoon. So let's talk about where we're at. So I did chart some new levels to the downside today. I grabbed a few of these candle lows and candle highs from the past just in case we continue selling off. But the price action today, lower time frames first. Let's see where you. All right, looks like we gapped up in the morning, filled the gap immediately, went up for a little bit, and then sold off for most of the day until about power hour. And then in power hour, we actually saw a 1% jump for the S&P 500. Some big buying coming in towards the end of the day. You got above this supply line, kind of this wedge heading into tomorrow. So going into tomorrow morning, all right, these are very small levels, and futures might be crazy, and again, FOMC and all that. Two very key levels you want to keep an eye on that are very short term for SPY. 375 resistance, that's where you were topping out towards the end of the day today. It was also your lows from June 13th. All right, well, it was your lows from June 13th in the morning. It looks like it broke that later in the day, but very key level is 375 for resistance tomorrow, and then support around 372. It's these two lows from today, but also, I mean, you got under it for a little bit. You kind of like sprung under it. It's kind of like white coffee, and when we look at the QQQ, you can see it. But you kind of just sprung under that level and then you just kind of got back above it. But if we go over to the daily, 372 is the level I've been watching because of these lows from March of last year. We talked about this level last night. So you went under 372 for a little bit today, but for the majority of the day you were able to hold it. So 372 is those are just very short-term levels. 372 support, 375 resistance. I've got a couple other levels charted. You break under 372 tomorrow, you want to hold today's lows. If you can't do that, I think 368 is the next level of support, dating back to another major candle low. So these are my levels. I doubt that this gap's going to get filled tomorrow. Even if the SPY rips, I mean, it would have to go up like 4%. I'd be very happy, but also very surprised if that were to happen. On the 1 hour, however, you do have a little bit of a wedge forming, and you had a bullish pin bar. So let's talk about this for a second. All right, we've gone down. We've had 1, 2, 3, 4, 5 red days in a row for the S&P 500, in which we've dropped about 10% in about a week for the S&P 500. Gotten a lot of volume coming in yesterday, not that much volume compared to yesterday. Today, got a nice little buy area towards the end of the day for some people. You did see some buying coming in towards the close. On the 1 hour, you've got this wedge, you got a pin bar, you got a MACD crossover. These are some signs I think that could lead to a dead cat bounce. I think the only way you don't get a dead cat bounce is if the market has a horrible reaction to FOMC tomorrow. But also that could have been priced in over the past 4 or 5 days of dropping 10% on the S&P. So whenever you have like a major sell-off going into a news catalyst, or vice versa, like a major pump going into a news catalyst, it starts to beg the question, what if it's already priced in? Even if it's a bad news event, what if it's already priced in? There's really no way to tell until after it happens and everybody else is reacting. But that's something I'm definitely going to keep in mind for tomorrow. You've already sold off a lot already heading into this. And I know we did have a pretty bad CPI reading in reaction to that last week, but I don't know. It would just be surprising to me if we just kept going straight down. I think a dead cat bounce is needed very soon. I mean, you know, it's technically not needed. The market can go lower for as long as it wants, technically. Even though it's never done that forever. But technically anything's possible, who knows. But that's where you're currently at. You know, tomorrow morning I'm going to be watching this 1 hour wedge. You could chart this on lower time frames too if you want. But watch for potential breakout here. There's not a lot of resistance if it can break out of this wedge tomorrow. Let me actually, I already have it charted on my 5 minutes, so you can actually just redraw it something like this. Okay, keep an eye on this for tomorrow. So that's the S&P 500. Also hit that lower Bollinger Band. It's out of the lower Bollinger Band. The last few times it did that, it's over here, over here, over here, over here. You know, this has acted as a bottom signal, at least short term, very, very often. Past couple of weeks, so we'll see if it works again. But again, these are all short term things I'm saying. I'm looking for a short term bounce in the market. Okay, that's what I'm looking for. I really don't know the extent of what that's going to look like, but that's pretty much how I'm seeing things right now. Long term, I still think you're in the middle of nowhere. I'm not bullish or bearish. Like in the next month or two, I still need more data to tell how I feel from a technical standpoint. So I'm just talking about short-term stuff right over here. Let's move over to the QQQ. Remember I was talking about like that 5-minute spring on the S&P 500 today? Take a look at this on the QQQ. This is a 5-minute time frame. Again, I don't really care too much about the 5-minute time frame when it's pertaining to the next day, but pretty white coffee in formation. It looks like white coffee accumulation. If the QQQ can get above like 279 tomorrow, that could be a nice little intraday breakout, but then vice versa, if it gets under 274, an intraday breakdown. On the 1 hour, you still got that same MACD crossover, bullish pin bar, kind of wedge formation, just like the S&P. And on the daily, pretty close to a bullish pin bar. Not the best context for you. You want it to be a little bit lower, but yeah, you're kind of in the middle of nowhere on the daily, to be honest. So that's your QQQ. Nasdaq is still testing this 10.8K level I was talking about last night. All right, from these lows in October of 2020 and these highs in July of 2020. Spent 2 days testing that level. Classic bullish divergence is eventually possible here if you start curling back up or this MACD island breaks these lows. So that's still very possible. You're kind of still around the demand line of this wedge. These are areas where I do think you could start to see a little bit of a bounce for the market. Now, some 1 hour levels are those for Nasdaq. That's where we're currently at. Moving on to small caps, the Russell 2000. So while the S&P and the QQQ have very clearly broken these May lows, I mean, like they're down over here. The Russell's actually, he kind of broke it for a little bit today, but for the most part, it's just holding them. It's holding them for right now. And again, we've been talking about that being a very big zone on the daily, used to be resistance. So it's attempting to hold them for right now. Same thing with the Russell 2000. The classic bullish divergence is eventually possible. Not really developing right now. We got a 4-hour bullish pin bar on the Russell 2000 today. And then a 1-hour bullish pin bar followed by a bullish engulfing candle. MACD crossover. These are good short-term signals in my opinion from a technical standpoint for the market. For the first time probably since we were up over here breaking down last week. So I do think that these are some signals that could lead to a bounce. We'll see what happens. Again, all it takes is one bad reaction to the FOMC tomorrow and all that's invalidated, but that's something I definitely am keeping an eye on. And again, all of these low time frame wedges you're starting to see already testing breakouts. So this kind of reminds me of like last Thursday. Remember? So let's go look back on last Thursday. All right, we had a CPI the following morning, which was Friday, and last Thursday we actually broke down before the major catalyst the following day on low time frames. Today we're actually testing a breakout before a major catalyst the following day. So let's go back to last Thursday up over here. Okay, so CPI was not out for the S&P 500. CPI was not out until over here. This happened before CPI on Thursday. Okay, you were in that range last week. You broke down ahead of CPI. Okay, and CPI was the following morning, was a major catalyst. What do we have tomorrow? A major catalyst. But what were you doing instead of breaking down? You're kind of breaking out, or at least testing breakout. So it's kind of like the opposite of what happened last Thursday, if you really think about it. That's something, again, I'm keeping on my mind, but take everything with a grain of salt when you have a lot of mutes pending. All the same. Finally, the ARKK ETF held 35 today. Didn't really test exactly 35, but went down to 35.65. Got a little bit of an intraday bounce. That's the key level for the ARK ETF, $35 from these lows in 29. So yeah, it's the overall market. BlackBerry swing still hanging on by a thread. I mean, it's 5 cents above the stop. This is the only ongoing swing currently. A good amount of them stopped out in the past few days, but also a good amount of them hit targets in the past few weeks, like GameStop and AMC and Zoom, almost Fisker. But yeah, BlackBerry is just hanging on by a thread. It's gonna need a miracle for this swing to get saved. And let's talk about Fisker and CLOV. They're both testing all-time lows. Neither of them are ongoing swings currently. I know these visuals are up, but I just kept them on my chart. So yeah, Fisker is testing its all-time lows that it made back in May. If it ends up breaking those all-time lows, then you have potential for triple classic bullish divergence. Are you still within this wedge even if you break it? It's not the end of the world, I think, if Fisker makes a new all-time low. It might just depend on the overall market more than anything, unless they have some news come out. But that's currently where you're at. 1 hour, I'd probably draw it to like a downsloping channel. So probably draw this 1 hour channel for Fisker. Got some 1 hour classic bullish divergence too. CLOV is not too different. This pattern failed on the one, but also might have already tested a breakout today. CLOV was testing $2 today. It was testing all-time lows and actually held it. I mean, it touched 199 today, but it actually did hold it. It's actually got a gap. I keep saying actually. It's got a gap fill around 224, but also some resistance around 20ish. All of these lows over here. Say 220 to 224 is resistance, and then $2 is support. That's how I look at CLOV in the short term. You're kind of right in between them. And then on the daily, we were talking about this pattern yesterday. You held the demand line for now. See what happens. Another name. A lot of classic bullish divergence is starting to become possible, which is interesting for sure. It's just not developing yet. But hey, if we have a good bounce tomorrow and a good reaction to FOMC, I could be live tomorrow night saying, all right, look, we've got classic bullish divergence developing on so many different charts on the daily time frame. That's something we haven't seen in a long time. So keep all that in mind. And yeah, very, very quick analysis tonight. Nothing too crazy. Just waiting on the big numbers to come out tomorrow. So the rest of the stream is up to all of you. Drop some takers in the chat and I'll take a look at them. Hit the like button if you don't already. Hit the subscribe button. If you're new to my channel, welcome to the stream. Make sure you join the Discord if you want to stay connected with all of us when I'm not live. The link for that is in the description. And also premium. I've only alerted 2 different option ideas in premium this week so far. Both of them were SPY calls, and both of them actually worked out. Today I alerted some SPY calls at around 1 p.m. It went from $1.02 to about like 140-ish. Yeah, these are the last couple weeks. This is pretty much June so far for the options alerts in premium, despite the fact that we were like literally going sideways between 407 and 417 on the SPY, and that despite the fact that we've gone straight down for the past like 3 or 4 days. This is the options so far. And even this trade, I know Mehdi was saying I can't get out of my mind. We were talking about this last night. It would have been another 10 win streak, maybe like my 3rd or 4th 10 win streak this year. If I didn't flip-flop on Amazon, I think it was like last Thursday or Friday. But nonetheless, pretty good moves lately. And yeah, so my thesis today was just a little bit of a wedge. I redrew this wedge after. So this wedge now I've redrawn to look like this. Right? Look like this. But I originally had it drawn something like this. And when it broke out over here pretty much is when I alerted it. And then this was like the move that led to that 40% intraday potential gain. Yeah, this was where it started, just right there at the apex of the wedge. This is right when I alerted the S&P 500 only alert today, only the 2nd alert of the week. And well, look at this, like the 2 alerts this week were both SPY calls. The first one was right here, like right where my mouse is. This was the first SPY call alert, and then the second one, well, was right here as you're looking at it. And what happened, that wedge eventually turned into this, and calls went 40%. So 40% in 20 minutes. And that's literally the trade recap from today. I wasn't even planning on alerting anything today. At one point, I actually sent a message in the overview channel that I was just sitting on my hands. But this wedge ended up showing up, looked decent, or a little bit more than decent. It worked out. So, there's that. He's saying whenever technicals looks decent, catalyst falling the next day. Yeah, there's been a lot of funny stuff like that. But yeah, try and get to 20 likes if you can. He's saying it's still in his head. Totally not. All right, Wish starting to pull back. It broke out of this long-term down sloping channel. Had about 50% run, and it looks like that long-term channel turned into a shorter-term bear flag, and it broke down from that, just like a lot of other stocks broke down from bear flags, which was like the main topic on the stream last week. Now it's selling off. In terms of support, maybe a little bit here around 145, and then all-time lows around 20. And then resistance, that previous high you made around 2. PayPal making new lows. Got a little bit of support here around $70. If that breaks, if $70 breaks on PayPal, I mean, if we really zoom in here, there's like a gap fill around like 67. But let's just say like this zone in general, this yellow zone over here breaks on PayPal. This is just crazy to think about. But if that does happen, okay, there is no technical support. Again, I'm not talking about minor stuff. Like you could really zoom in here, find some like, you know, gap fills and previous highs and chart that. But I'm just saying, if we really zoom out, like we're looking for major like swing highs, like historically. You get what I'm trying to say? Like the last time you had like some longer term consolidation was around over here. Before that, it was straight up. PayPal breaks that zone. I mean, the next area of major consolidation I see is all the way down to like 44. Just hypothetically, that did happen. It'll be like an 85% value decrease. And I don't know the numbers financially for PayPal, but that's just crazy to think about. I mean, there's no other words that I can use really. But it's testing its yearly lows. Hope that it holds if you're bullish on it. And if it doesn't, then let's talk about some other levels. I don't really have much of any personal technical thesis that I see here. Like there's just a lot of different ways you can look at this, honestly. So see what happens. I mean, it did break out of this channel, but only to kind of roll over again. A lot of stocks did that. A lot of stocks had these longer term channels. They broke out of them, went up for like a week or two, and now they're just rolling over again. It's really unfortunate. CENN, not a lot can be done here. This honestly might have broken down from a bear flag. It's already kind of done so. But if we just ignore that, let's look at levels like this. Some levels. Donald's a choppy chart, but got it like this. Symmetrical triangle. DraftKings. Testing yearly lows pretty much around $11. That's also a historical level dating back to the COVID crash. So it's testing its P level. If that breaks, then there's really not much under it. If it somehow holds, the reward to risk here could be insane. But again, all that's in hindsight. There's no way to know until it happens. Yeah, those are levels. Nothing really has changed on a lot of these charts. They're just kind of back to what I was saying on a lot of them like 3-4 weeks ago, a month ago. Beyond, I'm sure, is very similar. Just kind of back to where it was. It had a nice little rally, sold off again. Now it's back to where it was about a month ago. Like pretty much almost exactly a month ago, a lot of these stocks were at the same exact levels. Like May 12, 13, 14, a lot of these stocks were at their yearly lows, and now they're pretty much retesting them. So it's like we had a month of like just making these large bear flags everywhere, and then we broke down last week, and now we're just back to where we were. So you're just testing that level. That's all I see down here. Longer term, you're still in this wedge. SOXL. You're just hopping in the stream. Make sure to hit the like button on your way in. 3 more to hit 20. Actually want to go look at some semis after this, but this is interesting. So on SOXL, this is a semiconductor ETF, I think. It's towards the apex of this wedge, which is really interesting. But here's the thing, like, this is the COVID crash over here, right? This has made about about 80% retrace from the COVID crash low to high. If you look at some of like the bigger names in this sector, they haven't. So remember that it's made about 80%. It's come back down about 80% of the way from its COVID crash low to its high. Let's look for the COVID crash low over here. Honestly, I'm kind of proving myself wrong as I'm biting my tongue right now. I thought NVIDIA was much higher than this. Let's see if it's the same for MU. Let's see. So yeah, MU is a good example, right? So NVIDIA sold off quite a bit, but MU is only down to about a 60% retrace. And let's take a look at AMD. This is another good example. So apart from NVIDIA, this is also around a 60% retrace. So that's just an interesting little change. Let's see. But let's take a look. The swing hit 2 out of the 3 targets, pretty nice. Let's take a look at how these 3 names are looking. I haven't looked at them in a while. I like to keep an eye on them, trade them quite a bit. This was also, I think MU, yeah, MU was also a swinging premium. This hit the first target and then it flopped over or fell over. Let me just clear all that up. Let's take a look at how these are. What I might do, I'm just gonna do this, whatever. I'm clearing up these charts and we're gonna take a completely fresh look at how the big semis are. Alright. So start with levels. For anybody new to the stream, to find these levels, I'm just looking for major highs and lows in the past that kind of intersect horizontally. I know that sounds weird. I'm doing. Alright, so those are all your levels on the 3 big names in the semi world. I'm sure, I don't know, Intel, Qualcomm, there's some others, but just like the chip world, I'm not the best with these terms, I'm sorry. I know if Neutron's watching the stream and I just said something horrible, I really apologize. I'm not the smartest with computers. Or we're saying we need another 5,000% MU call. When was that? I feel like that was like was it like January? No, February maybe? That wasn't too far back, I feel like. Yeah, I would love a 5,000% gain. That would be nice. Alright, so kind of had these large wedges starting to form. The issue is that a lot of them have broken very, very key levels. They look kind of similar to the Nasdaq, honestly. Got these wedges forming, but AMD broke 100, that was a key level. MU broke a very key level at 65, that was like the huge level. NVIDIA broke a level at like 195, so I guess you can look for the next levels now. You already have sold off some more. So also got a gap fill on MU today. Look at this gap from November of 2020 that got filled today. I think they look like these are what I'd call like watch list tickers. All right, I don't know if they have all the variables for me to like put out a swing alert on them, but I think these are definitely names that I want to keep on my watch. They haven't been on my watch list for a couple months, for the most part, apart from the premium swings, which are only a few weeks long. These are names that I'd start putting back on my watch list, and I haven't said that for a lot of like I don't know if these are all considered large caps or not, but I haven't said that for a lot of large caps yet. I've said that for a lot of like mid caps and like small caps that are already down like 80-90% from their COVID crash low to all-time high. But these are like some names, like only these few, and maybe like in Amazon, like we were talking about last night, Facebook. These are some of the names that I would start keeping an eye on in like kind of like the more large cap type of world, the higher volume, larger companies, tech, all that stuff, the QQQ type names. These are some of the first ones I look at. These chip stocks, like we talked about, Facebook or Meta, which is now called, at this Shark PCZ area, and then Amazon too. It's still testing a very key level. Right? It's all together at the same place on my watch list. Amazon's still like, it's like literally testing this huge key level. And that was a horrible circle, I'm sorry. Right? So these are some of the names in that world that I would start putting on my watch list. I don't know if they're like bottoming like right now. I wouldn't say that for some of them, but there are names I do think could be some of the first in that space to maybe just outperform a little bit. We'll see. This is just from a technical standpoint, of course. You probably want to see the next earnings too. I think the next earnings season is going to be crazy because it's really the first earnings season since the COVID crash that these companies have fallen so quickly. If that makes sense compared to where it was like 2 quarters ago. So the year-over-year numbers are going to be crazy because the year-over-year change or the year-to-date changes are also crazy, and well, percent-wise, but also in share price. So next earnings season is definitely, because I don't know, it just felt like the earnings were just trying to catch up to a lot of these stocks, like literally just going straight up. The multiples were going crazy, and now you're just on the flip side. So it's the first time I think you're going to see a little bit more craziness out of a lot of these earnings, just based on what's happening in the overall market. And also on the beat side, a lot of these names have literally just sold off because the market's selling off. There's probably some there is some companies that have definitely shown great improvements over the last quarter. And again, it might be a small percent because I know there's supply chain issues and inflation and just a lot of issues in general with the economy right now. But for the companies that do, or that have been able to withstand all these economic constraints, and they've only sold off because the market's selling off, and they haven't sold off because they've become like a worse company. When you start seeing those numbers, maybe not like in just 1 quarter, but in like 2 to 3 quarters, you might start to see it like earnings mattering again. Is that crazy to say? I just feel like earnings haven't mattered so much with so many of these stocks, apart from like, you know, Netflix or something. Just got crushed, but it's gonna be really fun to see the types of moves we get on earnings first time in a while that aren't just like sympathy moves for the market, and they're more like actual individualized stock moves. Hopefully you got what I'm saying. Alright, so hopefully you enjoyed the stream. Thank you all for supporting me again. Make sure to join the Discord. Looks something like this, or exactly like this. When you join, go to verification and click both of these buttons to get access to chat. Check out all the channels. This is where I learn everything and whatnot. A lot of educational channels here. A lot of good content. 1,000 traders for you to meet. Yeah, these are the premium channels. That link's in the description as well. If you want to donate crypto to Ukraine, that's the first link in the description too. See what happens tomorrow. The like button if you don't already. I want to see a couple more likes getting hit. And subscribe if you haven't. Alright. I also just, I don't know. I feel like I'm ending the stream, but I kind of don't want to. Like, look at this, alright? Just a weird time to end the stream. Second. So this is the stream viewership so far. It's really tough, like, for me to end the stream when the stream viewership's like this. It's like, I feel like a lot of you might have just gotten here. And I just feel like I'd be doing a disservice on the stream. So maybe I stick around for a little bit longer. I don't know. Drop a 1 in the chat if you want me to keep staying live for 10, 15 minutes. Kevin in the chat, looks like you're going through right now. A lot of other people are in the same boat. So many asset classes are selling off. It's not just you, all right? Metals are down, dollars losing value, equities are down, so many global markets are down, crypto is down, NFTs are down, real estate's falling, I think, in some areas. I'm not too familiar to say. almost everything. I mean, there's like bonds and like a few commodities that are going up, but you know, for anybody who's not like, and even like, so those are like longer term stuff selling off, right? Even for day traders, you've had weeks like last week where it's so choppy and it makes it so much more difficult to day trade. I don't want to pat myself on the back too much, but most of the trades I was learning were wins over here. It's just a fact, which literally like earlier in the stream, these were pretty much the trades I was learning in that area. But it's not easy. This is not an easy environment to be trading, even investing. So for anybody who's been having a rough time, patience is the number one word. Okay, I have not been making an insane amount of money this year. I definitely had a better year last year. It's okay that you're not always going to be at your all-time highs on net worth every single day. It's just about looking for higher lows. Just like in a stock, you want it to be in an uptrend, right? No stock is going to do this and be sustainable, okay? It's just not going to happen. You want it to be sustainable, okay? So you might be here like literally right now, and that's when you feel like you're at the bottom. But remember, your bottom could be much lower than that. It sounds weird to say, but just psychologically, you have to be able to get through times like this, because these times have come before, and every single time historically they've been left in the dust. Okay, left in the dust. This is the S&P 500 last few decades. I mean, I don't even know if we look at this like longer term, this is what the market has done. This is where we're at. So, you know, from where we were over here, it feels like the end of the world, but good times will come again at some point. So I'm not the best motivational speaker, but it's just always good to have perspective. And I know a lot of you are looking for more like direct answers, like what should I do right now to make money? I think where a lot of people can start is with your mindset. I think the mindset is one of the first places to start. And then yeah, you know, there's definitely a lot of areas that have gone up. I mean, energy, and again, you know, at some point those are going to top out, and that's what we were talking about last week before it started pulling back. But also, you know, and this is something I don't want beginners to start doing, because that can make things a lot worse, and that's not financial advice. But if you're like a longer term investor, and then you maybe see people day trading and they're like, oh my gosh, these people are, you know, buying and selling within hours and they're making so much. And then you were like, all right, I'm done with this long-term stuff. I'm getting out of my retirement account. I'm just going to start playing all the little ups and downs. That could be very tough. Okay. Day trading, I think, looks like a dream once you've had a lot of experience with it. But I've seen so many people have horrible experiences with day trading and they just don't talk about it. And I've been there too myself in the past. That's why I was mainly swing trading for a long time, and I only switched to day trading probably towards the end of last year. It's all in the experience. It just takes time. And anybody struggling now, hopefully some of that just helped out. I don't know. And then also, yeah, counters in the chat talking about puts. Short side's also a thing, right? We were talking about that short potential move on XLE. I brought up a lot of different short potential plays and bearish ideas and stuff like that. I've shared some puts here and there. There's also, you know, I'm playing the flip side too. It's like literally, boom, the chart's flipped over. So I don't know. Hopefully some of that made sense. Jeff says, what are your thoughts on all the recession talk? No, TA is more your thing, but curious. You know, I don't think the economy is in a good state right now, but I do think it's in a fixable state, if that makes sense. Okay, and a lot of you are much more well versed in these topics than I am. So I think a lot of the damage has already been done. I wouldn't say it's like we're at like peak damage. Like, let's look at this. I know I don't really want to like bring up technicals into this, but let's say we look at this as a chart, right? And this is just, we're going to call this the health of the economy chart, right? And the higher it goes, the worse it is. So let's say like the danger of the economy chart, right? Not the health. This is the danger here. I'm going to make a new chart right now, okay? This is not a real chart. This is not financial advice. Taking like 2 economic classes. So yeah. All right. So I don't know like the best word to use. It's like, let me just do, all right, health of the economy. All right. So the lower this goes, the worse the economy is. The higher this goes, the better the economy is. All right. And I'm just gonna look at this from like a year ago till now. So let's say this is June of last year, and this is where we are at right now. So this is June. This is 2021 to 2022. Okay. Let's say we started here. I think, you know, this has definitely happened with the economy. And I think we're at a point where, can we go down to these areas? Yes. But I don't think we're going to be like going down to these areas. Does that make sense? That's a very just like, if you were to ask me to like visualize where I think the economy's at, that's what I would say roughly based on a lot of different factors. But that's really what I would think in terms of recession. I know there's been some articles coming out. I think it was saying that it might just be a quick recession. It's a very weird thing to say. And I think we're what, like one GDP number away from that being official, or one GDP. I don't know. Always come back from recessions, and a lot of them have provided lifetime generational wealth building opportunities for those who are ready for them. So I think it's just about always. I tweeted this recently, but you don't have to prepare if you're always prepared. You know, just how I look at everything. Just prepare for the worst. Whatever happens, happens. Not to be like negative. Like, I'm not trying to say it in a negative way. I'm just trying to say, like, as long as like a meteor doesn't hit Earth, I do think the economy will recover at some point. But I know it's definitely very tough for a lot of you. So just patient. Can't tell you when this is gonna all get better, but hopefully we're sooner towards the end than a lot of people think. Hopefully, I'm saying hopefully we are. I don't know if we are, but I'm hoping that we are. So that's my thoughts. Yanu says, we aren't going to crash. I'm already adding to my Roth. Tesla, Apple. Crashes are never predicted. That's why The Big Short was a movie, because one dude predicted it, essentially. Wishing you the best, Keanu. Transitory. Who remembers transitory? I think it's safe to say at this point inflation was not transitory. Maybe? Is that a hot take? So, yeah. You know, there's areas that go up. You know, take a look at coin futures. Been on a nice uptrend. Pretty much, this is when like a lot of small caps were like topping out. Had the little squeeze lights fall. There are definitely areas where money being made right now. It's just not really areas that make sense for most retail traders / investors, in a sense of like accessibility and just also. I mean, I just don't know a lot of retail traders that trade corn, right? That's what I'm trying to say. But, you know, I think money always will have to go somewhere. It's just we're just in the time, I think, where the way money is flowing is not optimal for most people. It's a very interesting concept. All right. So have a good night. Maybe this super moon changes things. Maybe it doesn't. I don't know what you believe in or don't. See what happens. And good luck tomorrow. FOMC. We'll see what that brings to the market. It's been a crazy weekend. It's only been 2 days. So let's see what happens the rest of the week. Thank you for watching the stream. Thank you for supporting me. Hit the like button if you're not already. Timestamp should be up in 10 minutes or so. Peace out.
I saw you dancing in a crowded room. You look so happy when I'm not with you. But then you saw me, caught you by surprise. A single teardrop falling from your eye. I don't know why I ran away. I make you cry when I run away. You could have asked me why I broke a heart. You could have told me that you fell apart. But you walked past me like I wasn't there, and just pretended like you didn't care. I don't know why I ran away. I make you cry when I run away. Take me back, 'cause I wanna stay. Save your tears for another, save your tears for another day. Save your tears for another day. I made you think that I would always stay. I said some things that I should never say. I broke your heart like someone did to mine. Now you won't love me for a second time. I don't know why I ran away. I make you cry when I run away. Take me back, 'cause I wanna stay. Save your tears for another. I realize that I'm much too late.